Hello everyone, this is another update with my experiment with the RobinHood app. I seem to be doing quite well despite my frustrations with the ability to trade at the level that I'm at with cash in the account. What I've experienced throughout this process is you're going to miss out on a lot of trades. Just a ton of trades. Tons and tons and tons of trades you're going to miss out on. So you got to find one that you hopefully think is right and pick it and hope that it works out the best for you. So this is a quarterly update on my progress. This is my first full quarter trading in this experiment. So keep in mind I did start in March, midway through March. So my total amount is $59.94 at the end of March. So April 1st going in, that's what I had. By the end of June 30th, I had $457.19. Discount $240 a week. I was making $20 a week deposits. 362% gain. Let that sink in there for a second. 362% gain? How do you get a 362% gain? By picking the right stocks. You buy once, you sell in the same day. Now that's a risky strategy. That's a high risk strategy because you can pick ones and you could be losing money left and right. And sometimes there are better ones that I picked. I mean, there were some that I looked at, I didn't want to buy, so I let it alone, and I missed out on a great opportunity. So it's a give or take with the amount of cash. Now, if this was a multi-million-dollar account, of course, I'd hit every trade that I wanted to hit, and I would probably make even more money. But with $500 right now, it's getting very tough because you can only pick one stock at a time, and then you got to wait till next Friday before all the funds are clear. So you're just kind of sitting there like, yep, I'm just going to have to wait. But what this quarter proves is that I spent $240 and I've made $210. Well, let's see the difference here. So, yeah, there's about $190 is what I really made. $190 in 3 months. I mean, it's not much. But considering that you're only putting in $20 a week and you made $190, that's a pretty good amount. That's half the value of the portfolio I've made. So if we just add a couple of zeros to that, then that means I would have made half that value. So if we made that instead of $59, we made that $59. Let's make it $59,000. That means I should have made close to 190. Should make close to 190,000, because I would have been at 457,000, and pretty up there, discounting $240,000 of deposits. So that means I would have made $190,000. And it's hard for a lot of people because I tried talking to a lot of young people who are in probably the best positions to start investing. They don't have a family yet, but they have good income. They're newlyweds. They don't have a lot of responsibilities yet. And here's a perfect example. It's like you could be putting away $500 a month, picking some conservative stocks, blue chip stocks, mixed in with some riskier stocks in there, and you can be making some decent money. Now, I'm trading based off of my experience and knowledge, trading and understanding of how to trade. So I take a little bit bigger risks than someone who's maybe does not have a lot of experience trading may take. But I want to really prove to see if I can make some money. So this quarter I made a 362% gain. So if I could do the same thing over the next 3 months, that means I should be close to $1,000 with the same amount of deposit ratio. With a little bit more cash flow and equity, I can make the same trades and better. So, what I'm thinking here is that I'm going to be in great shape by the end of the year, because after 2 quarters, I should be getting close to $2,000, and my total investment should be less than $1,000. So that means I've made more than 100% trading. Now, granted, I'm taking riskier things, like I said, but still, I think that's a pretty good progress in 3 quarters of the year. So imagine if you had the full year and you had more money. So with that said, my portfolio still is First Financial Corporation, Ford, Fit, and Citizens Bank. Now, there are some buys I do buy. I buy a lot of biotechs. I just buy a lot of stocks that I know, oh, that company shouldn't be that low. It's just market error. Buy it. Oh, look, went up $10. Sell. Down. Come back next week, find another stock. Now, the ones I have in my portfolio are my long position, which up to this day, with all the grease, with grease going haywire, and people thinking it's going to affect us. I mean, it may affect everybody a little bit, but it's not going to affect us, because Greece is like Florida. It's primarily a tourist location. Its other main manufacturing is olive oil. So it does have some banking industry and some finance, but it's not that big. Like, tourism is the biggest part of that country. So, of course, when tourism dies, the country dies. With that saying, I think now is the best time to start buying and gobbling up stocks, because people have undervalued them so much that there's some great buys there. I mean, when I know Wells Fargo is taking a dip, and Microsoft and IBM, I know it's not their performance. I know it's just the market. Even if the market crashes, just keep putting them in money, because you're going to start buying stuff up at a premium, at a nice little hefty premium. So, I mean, I start buying some stocks again on my regular account, because I know I'm going to make a significant killing right now once the market recorrects. However long it takes, just keep buying. However long it takes, keep putting money in and buy it. It may take a year to recorrect, but it's going to recorrect. And it's going to recorrect on the positive side. I'm going to make some money. So with that said, I want to thank you guys for watching. Like my Facebook page, subscribe, comment below, ask questions, fire away. Let's work with each other, find some good stock picks. I know a couple people have asked me about Twitter. I do not like Twitter. Me personally, I just don't think they make enough money as a company, and I'd rather see them have enough income that they're building significant reserves. The more reserves the company has, the better the company can weather any crisis that may happen, whether it's a financial crisis or it's people lose interest in the company. I.e., case in point, Radio Shack. They were a great company with lots of money in the bank, but not enough money in the bank, and lo and behold, after their first bankruptcy, now they're going back for bankruptcy, and this is probably the end of Radio Shack. So, be careful when you pick stocks that look like everyone says, like, oh, it's great, it's great, it's great. Well, when everybody's saying it's great and everyone's buying, that inflates the real market value of the stock. Look at the financials. Does it have cash? Does it make a lot of profit? Like at least over 55% at the end of all expenses? And we can move on. That said, good luck to everyone. Like and subscribe. Goodbye.